So, hi everyone. My name is Dipen Ramanandi, and today I will be presenting on the topic of fossil fuels. Investments are no longer attractive to equity investors. So, to start with, for decades, fossil fuels were viewed as a reliable and profitable investments. However, growing climate concerns and stricter regulations and financial volatility have shifted investors' preference. Clean energy, once seen only as an environmental choice, has now become the smarter financial choice for long-term investors. And the second slide, historically, fossil fuels companies such as ExxonMobil, Chevron, and Shell provided stable dividend and predictable returns, but today their appeal is declining. Environmental regulatory, and financial pressures are creating significant risks. At the same time, clean energy is emerging as a profitable and sustainable alternative. In this presentation, I will be covering three main points: why fossil fuels are losing their attractiveness, and what these changes mean for investors. So, to look at the other side of the slide, so from the 1990s to 2010, fossil fuels dominated global energy supply and were considered low risk long term investments. Investors favored them for stability and security. However, the sector faced growing unvariability, oil price stock created uncertainty, geopolitically events disputed market and new environmental regulation increased cost. Together, the factors are started weakening fossil fuel as a reliable investments. On the fourth slide, decline in attractiveness. There are four main reasons for fossil fuels are now as seen as a less attractive. First, environmental concerns, as they are leading drivers of climate change. Second, regulatory pressures with government imposing carbon taxes, emission caps, and climate reporting. The third one is financial volatility, if I'm pronouncing right, and where oil prices have become increasingly unpredictable, and the finally uh, social risk, and as divestment campaigns and activism push inventories away from fossil fuels towards more ethical. Uh, the fifth slide is environmental concerns. The environmental impact of fossil fuels is un- undeniable. Burning them, releasing greenhouse gases that drive climate changes. The intergovernmental panels on climate change of or uh, IPCC in its 2021 report recommended that global emissions be cut in half by 2030. This global urgency makes fossil fuels at high risk investment. Companies and investors that continues to rely on them face growing pressures to decarbonize, and regulatory pressures. Government worldwide are enforcing stricter rules to reduce emissions. Policies such as carbon taxes, emissions caps, and climate risk reporting directly impact profitably. For example, Canada's carbon tax increase costs for fossil fuel companies and reduces their competitiveness. These policies make fossil fuel less attractive or to risk conscious investors. Uh, the next slide is financial risk and volatility. The fossil fuel sector is in highly violated. Violate. A strong example is the COVID-19 pandemic, as we all know. When West Texas intermediate oil prices fell below zero, investors are also face the risk of standard assets, meaning oil and gas reserves that may never be used because of environmental restrictions. This level of uncertainty makes fossil fuel unattractive for investors looking for long term stability. And the next slide is social and reputational risks. Beyond economics, the fossil fuel industry also face strong social pressures. Uh, Divestment campaigns and environmental activism have pushed institutions to withdraw their investments. Universities, pension funds, and even religious organizations are selling fossil fuel holding to align with environmental, social, and governmental principles or ESG. uh, this shift not only impacts company reputation but also reduce investors in the sector. The next slide is rise of clean energy. So, in contract, clean energy has grown rapidly. In 2022, global clean energy investments reached over 1.1 trillion dollars, surpassing fossil fuels for the first time. Sorry. Renewables such as solar, wind, hydro, and battery storage are becoming cheaper for for efficient due to technological improvements. Developing nations are also adopting renewable solutions to address pollution and waste issues. Clean energy is no longer just about the environment, it is now profitable financial opportunity. To move on, so I have explained this slide. So uh, I will move on to the next slide, which is ESG and investors' preference. So ESG factors have become central to investment decisions. Investors want companies that demonstrate responsibility towards the environment, fair social practices, and strong governance. Over $40 trillion has already been invested from fossil fuels. Firms with high ESG ratings are attracting both institutional and retail investors. BlackRock, one of the world's largest asset managers, has highlighted sustainability as a priority in the investment strategies. The next slide is financial uh, performance of clean energy. Sorry. Financial data shows that clean energies companies are performing better than fossil fuel companies over the long term. Supportive government policies, subsidies, and technological advances have increased returns. For example, companies like Next Era Energy, Orsted, and Tesla has experienced strong growth by focusing on renewable energy and innovations. Investors see clean energy as a faster, more profitable option for the future. The next slide is emerging clean technologies. The clean energy sector is also highly innovative. New technologies such as green hydrogen, offshore wind, and advanced battery storage are transforming the industry. This solution has addressed challenges like intermittency, ensuring a stable and reliable energy supply. Innovation is opening a new market and making clean energy even more attractive to investors. The next slide is sorry, integration with finance. The transaction clean energy directly connects with finance concepts. Fossil fuels are carrying high systematic risk due to oil price shocks and geopolitical tensions. Clean energies, on the other hand, offers long-term cash flows, marketing it ideal for pensions and ocean funds. The cost of capital is higher for fossil fuels firms, which clean energy benefits from subsidies and green financing. Additional renewable additional renewable to the portfolio of also improves diversification and risk adjusted returns. The next slide is market trend. I will finish in short. Market data clearly shows fossil fuel stocks underperforming comparing to the broader market. Meanwhile, renewable energy funds uh, continue to continue to show up continue to show upward trends. This proves that investors are already making the shift from fossil fuels to clean energy following financial performance rather than just ethical motivations. Uh, the next slide is divestment movements. Divestment movements are playing a major role in this transaction. More than 40 trillion has already been divested from fossil fuel. Universities, pension funds, and religious organizations are leading this trend. This is not short-term move. It reflects a long-term shift towards sustainability in investments. The last slide is future directions. So government policies will continue to accelerate the transaction. The U.S. Inflation Reduction Act, Canada's Clean Fuel Standard, and the European Union Fit for 55 plan all provided strong support for renewable energy. Looking ahead, new technologies like hydrogen power and battery storage and smart grind systems will open even more opportunity for investors. Uh, and in conclusion, fossil fuel investments face major challenges: environmental risk, regulatory cost, and financial volatility, and social pressure. Clean energy, on the other hand, offers growth, investments, opportunities, strong financial performance, and alignment with ESG values. The evidence is clear. Fossil fuels are becoming less attractive, while clean energy presents the future of the long-term investment. For the investors, aligning with the global energy transaction is not only ethical choice but also profitable one. Thank you very much.